Welcome back to a new video live from the ET7. We're on our way back to Germany, going through the Alps, so it's raining quite a bit, and on some parts of this journey, despite the heavy rain, Miriam was able to use the autopilot function, but it's more safe to drive manually here. And let's see what the improvements over time will bring. By the way, we also now did a software update, so should have the latest software now, and I'll give you a update in another video later on which kind of improvements we recognized. But this video now will be about the earnings which are coming up tomorrow, and I'll first give you a couple of things that have been quite shocking in the last earnings call, and watch it till the very end when I give you also a little bit more of an outlook what I'm watching tomorrow and what I'm expecting. So first off, let's start with the notion of whether or not the worst is already behind us, because I think, at least that's my personal perception, the last earnings call really was a shocker. It was really one of the worst earnings call of NIO that I've been participating, and that does mean quite a bit, because I've been in NIO 2019 as a shareholder when they actually cancelled the earnings call, I think a couple of hours before it was set to take place. So NIO has a history of unfortunately being not very well at handling some of these earnings calls, and the last one, to be honest, was frankly one of those that had those strange vibes that they really hadn't the call under control, and that was especially in the Q&A with some of the remarks around the guidance of how they want to break even and cost control and that sort of thing. So on the other hand, this gives us a little bit of something to look forward to, because essentially in the last earnings call they possibly put out all of the negative news already. The first one was the shock number one about the gross margins. They said, like, in the first quarter of 2023 it was only 1.5% compared with 14.6% in the first quarter of 2022, so year over year, a big decrease, and 3.9% in the fourth quarter of 2022. So overall, I think many investors did not have expected that we'll still see a decline in the gross margin the last earnings call, given the fact that for example the lithium prices has already come down. And so that was the shocker number one in the last earnings call, which certainly we won't hopefully have to expect in this quarter again. But of course, there might be reasons why the gross margins are even declining further. So XPeng, for example, has now reached negative gross margins, and that's of course something very, very bad. However, the explanation in the last earnings call was the decrease in vehicle margin quarter over quarter was mainly due to changes in the product mix and increased promotion discounts for the previous generation of the ES8, ES6, EC6, which were partially offset by the inventory provisions, accelerated depreciation on production facilities, and losses on the purchase commitments for the previous generation of ES8, ES6 and EC6 in the fourth quarter of 2022. So will we see, like XPeng, negative gross margins? Not quite sure about that. However, I think the big shocker already happened in Q1. The next one is they shocked us with the fact that they said the break-even point is actually going further to the back. And I think many investors have obviously been hoping to not hear this because of course the break-even point is quite important, especially now that when the interest rates are spiking and we need to discount the cash flows with those new interest rates as a variable going in, then of course if the break-even point is put out further behind, that also means the stock price needs to go down. And that's the unfortunate news, and they broke it in the last quarter in the earnings call. And I'm not expecting a similar thing to happen in this earnings call at all. So once again, something which they were quite rational and frank about in the last earnings call, and hopefully won't get this shocker again during this one. Now the third one, margin guidance. The gross margin can recover to 15%. This was another shocker because in the previous earnings calls, they always guided us that they will reach ultimately 20%, 25% or even more. And in the last earnings call, they said, well, this year we might just recover to 15% gross margin. And I think the investor expectations, frankly mine as well, have been a little bit higher here, given that we were hoping for a volume increase again, and therefore also better gross margins. And the real shocker here is that they kind of took down the long-term outlook from 25% down to 20%. And that's in the case that they do a little bit of vertical integration, their own chips development, their own battery development, and that sort of stuff. So it's quite a bit too true for investors, I would say. And then the next shocker was that they basically said that the value proposition is currently not working. They literally said that the higher service standards and the battery swapping, NIO Life and all that, these sort of things in the current climate of price war and consumers being more conservative with their spending in this environment, that this value proposition is not being appreciated as much as the management previously thought. And this is almost a break in the business case or in the investment hypothesis, because if this should break on a long-term level, of course, then one should wonder, why is NIO doing battery swapping and investing in new houses and all those sort of stuff? And hearing that from the management directly, this was very, very straightforward and something, I don't know, like, I'm not sure if an American investors relation teams or management would ever even say in an earnings call. So these are already 4 big things that I think in the last quarter in the earnings call they really brought forward, and they were very, very negative. And in my point of view, the way they've done it was also not very confidence instilling. Luckily we did see, even though, a stock recovery, because basically maybe sometimes also when the truth is out, then investors can only look forward to, right? And so now let me jump into something that I'm watching for Q2 this time, and what are my outlook going forward. All right, so I arrived at the hotel, and now I can finally give you the 4 things that I'm watching for tomorrow, or what I think is worth looking forward to. So the first one is about sales, and that's kind of a given. Of course, I want to get a guidance of around 20,000 monthly, if that's in consistent manner, and possibly with a ramp upwards towards the end of the year. But frankly, I'm not even too much looking forward to those kind of the sales projections. This is always the same. We already had it in the last quarter. The second more important thing to watch in my point of view is if possibly even the Q2 margins could already show a rebound. Yes, you heard me right. I would love to see already the margins rebounding in Q2. And that's, of course, given the explanation that we had before, that the Q1 margins were heavily impacted by those NT 1.0 platform sell-offs. And that was possibly not the case. I know the volumes weren't great regarding the cost side and model ramp. However, if this would already show the trajectory upwards in the margins towards a recovery of 10% in Q3, Q4, or even up to 15% towards the end of the year, that would be really great news. And in my point of view, that would be a huge catalyst to the stock. Now, the third point, what I'd like to see is additional information about metrics around battery swapping. So they guided for 1,000 battery swap stations for the entire year, right? Now we arrived at 1,700, and that's kind of great, but it's still not the pace which they said it's gonna be, right? And of course we know about the implications regarding the costs of swap stations and so on, although we're still a little bit guessing there, and I don't see them really talking about the cost side of things. But what I'd like to hear more about, and which they kind of hinted in the last earnings call, is about how battery swap station build out is actually helping sales. So they mentioned that if they go to areas where there has not been a great infrastructure and they start building out infrastructure like the battery swap stations, then sales are also coming. And I would like to get some sort of a number for investors. Maybe you remember my video that I've done about Shenfei NIO Power VP, about the different metrics that he gave in that interview about battery swap stations. And that's the sort of the insight and stuff that I would love to get during an earnings call from NIO management. That would be extremely nice to have such kind of a number, because it would add predictability and more confidence in the big plans for battery swapping build out. So I'm expecting that they will announce that they are sticking to the build out and that they will get more pace to it. But such an announcement would only be bullish in my point of view if they combine it with some sort of metric on how this will impact sales or create different new revenue streams in sort of monetizing battery swap stations. And last but not least, and we might need the analysts to ask this question, but I would love to get more flavor on the deal with the Abu Dhabi government. They invested in NIO, and we know that we got some money for it. We know that they diluted shares for it. We know it happened at the recent all-time lows, and I still don't understand why they did that in this manner, knowing that the sales would ramp up and knowing that this would potentially also increase the stock price, and also given that the whole China space was really at a very low level at the point when they raised. So I think there must be a huge strategic aspect to it, or some other sort of an announcement connected to it. And so far, from the news releases that we got, we can't really grasp anything valuable or tangible here so far. And I'm just hoping that NIO would provide more outlook, or maybe some sort of a surprising announcement even on a positive side here regarding the Abu Dhabi investment deal. And so with that, I think the expectations for the earnings call are quite low actually. We all know the numbers won't be pretty. We know that's going to be a lot of cash burn again and that sort of thing. But in the end, I think it could actually be a surprise to the upside, and a surprising earnings call on the positive side even, given that, how I outlined before, in Q1, they already gave all of those shocking moments and really, really bad information, to be honest. So I think maybe investors are a little bit more too skeptical, too negative going into this earnings call, and maybe they already gave us all of the bad news last time and have something more positive this time to announce. That's just my hope. I'm just guessing here, but that's kind of my feeling going into this earnings call. So let me know what you think about it in the comments below. If you like that video, please smash a like and share so that more people can actually get this information. And then thanks for watching, and see you in our earnings call tomorrow.